Hey there, this is Alex with Arch Public, and today I'm going to walk you through the new and improved arbitrage algorithm. For those that are new, we're going to go through a quick initial setup. We're going to apply recipe number one as an example. Then we're going to dive into the new features for all of our existing clients, go over how to integrate those in your current strategy, and then we will finally go through the setup for accumulation, scaling out of a position, and cash yield. So let's get started. If you're new to the Arch Public crypto algorithms, I'm going to assume that you have gone through the Bitcoin setup guide and have added your TradingView username to the Arch Public client portal. Once you've waited 24 hours, if you go to your TradingView charts under indicators up here, you should see under invite only your Arch Public algorithms you have access to. For this video, I want you to click on the arbitrage algorithm. I'm going to be using V3 beta. By the time you get this video, you should have the same features here. And what you're going to notice now is on your chart, you're going to notice the arbitrage algorithm has appeared here, and there should be nothing on your chart. The reason for this is that we're not on the right exchange pair yet. To switch to the correct exchange pair, we're going to go up to the top left to where it says Bitcoin US dollar right now, and we're going to click change symbol, and you're going to get a list of pairs and their associated exchanges. We need to be using the Gemini Exchange, and so to do that, we're going to click all sources and type in Gemini, and now you're going to notice that all the sources are now Gemini. So we're going to select that Bitcoin US dollar pair up here, and you'll notice in the top left it says Bitcoin USD Gemini. Your chart will now have the corresponding buy and sell orders that the algorithm has generated. And one more thing, we want to make sure that whenever we set up a recipe, we're paying attention to the time frame it's on, because they do vary and they do affect the outcomes quite significantly. So you're going to see we're on 1D right now, which is for the daily. Up here is your selection of time intervals. If you click the arrow, you can actually add a custom time interval, and we're going to be using that for this recipe. So we're going to type in 6 hours, and I already have it on mine, so I'm going to click 6 hours. And you're going to see that the chart has now changed. Your buy and sell orders have now changed to correspond with that time frame. So we're going to input recipe number one for Bitcoin just to get started. So to change our settings, we're going to hover over the arbitrage algorithm line on our chart, and we're going to click the settings menu. So we're going to have a lot of settings here. For now, I want you to enter -2.5 for long threshold, 2.1 for exit. We're going to have sell above cost basis checked. Keep everything else the same. And for entry size, we're going to start with 580. And for exit size, we're going to start with 260. Start date, let's bring this forward a bit. 2022, month one, day one. For end date, anytime in the future works. I just have it on 2030 as default. You can keep limit to available capital checked here. And up at the properties tab, let's set initial capital to 100,000 to keep it more reasonable. And order size doesn't matter for the arbitrage algorithm. The entry and exit size inputs that you previously entered do. And pyramiding, just keep this somewhere above 100. This number is correct as well. And we're going to press OK here. So we have just inputted the exact settings we have on our support site for the 6-hour arbitrage recipe. One thing to note too is if you have other indicators on your chart, make sure those are hidden. You can toggle them on and off with this eyeball icon so that I can turn off my arbitrage strategy. We're going to do that just to keep everything clean. You're going to notice that down at the bottom, you have this nice little strategy tester window. You can actually minimize it and expand it again. The strategy tester is going to be very useful for us because it's going to show us all our metrics over the given time period, and it's going to allow us to really do some deep analysis here. There's a bunch of tabs under the strategy tester, so we can take a look at performance, trade analysis, and even if you have the premium version of TradingView, you'd actually download this as a CSV file and do your own data crunching. We're going to keep this minimized for now. So at this point, you have set everything up for automated execution. The last step is to take all these settings we just created and save those in an instance. The instance is going to be the actual component that sends these orders you see on the screen to your Gemini account for execution. So to do that, we're going to go to the right-hand side of the window. You're going to see these icons here. Click on the clock icon. It's called Alerts in TradingView. And you are going to see alerts and logs. So press the plus button, and you will be able to create your instance here. So we just want to double check at the top that we are in fact on the right symbol, Bitcoin USD. Condition, this needs to be your algorithm. So it should say arbitrage algorithm here. So this is correct. Interval, same as the chart. Expiration date, push this out as far as you can. I know they give roughly 60 days if you have the essential membership. If you have a premium membership, you can actually do open-ended alerts, meaning you'll never have to reset this when it expires for the essential membership. So if you do have the essential membership, keep in mind that after the 15th, for example, you're going to have to come back in here and just restart it again. But it's pretty simple to do, and it's not a bad idea to check up on the algorithm every once in a while so you don't forget about it. So I'm going to click open-ended alert and set unexpired, and I will give this a name. And for this message section here in your Arch Public client portal, you're going to go to the webhook section, and you're going to copy in that long message and paste it into here. Make sure you copy it exactly. We have a copy button in there, and you can also right-click copy, and then in here, right-click paste. The last step before we set our instance live is to head over to the notifications tab within the alert and just make sure that webhook URL is checked and that you've copied and pasted the corresponding webhook URL from your client portal over into this section. So go ahead and click save, and you'll notice in your alerts on the right-hand side, you will see that Arch Public ARP Test we just created, and it should say active here. And you'll notice this is the right one. As we're hovering over it, we can see this box. It gives us all the information we inputted, and you can see the time frame is 6 hours right here. If we ever want to pause or edit or even delete it, we can do so here. Just simply go over to the edit icon, and for example, if we need to change the expiration to sometime in the near future, let's say it's expired, just simply set it once again forward to, let's say, June 14th, and click save. And that is the quick and dirty of how to set up the arbitrage algorithm with a recipe and actually have it fire on your Gemini Exchange. So let's check out what's new for the arbitrage algorithm by going to the settings menu of our arbitrage algorithm instance. On the inputs, you're going to notice that you can now enable both long and exit thresholds separately. And so what this effectively does is we can now not only arbitrage the volatility of whatever the underlying asset is, we can also, let's say we have a pre-existing position that we want to scale out of intelligently. If we disable the longs, this turns into a really great sell-side instance. You can see that we're pretty much selling these volatility spikes all the way up as price increases here. And if we throw this on a larger time frame, this becomes even better. And so that's going to be a pretty powerful feature. We have a lot of clients who have requested a sell-side algorithm. This accomplishes that goal very nicely and really complements. Let's say you stack this on top of an instance of the arbitrage algorithm designed to buy and sell. This becomes very powerful as a comprehensive strategy for a larger position. I'm going to click this back on, enable those longs again. You'll notice as well that we have a sell above cost basis button. It sells above cost basis only. To show this, we can click the show on chart. And now you're going to see a cost basis line. So this is our cost basis. So you'll notice that we are not going to sell below this blue line here. Once again, you integrate this with a sell side feature, becomes a very powerful solution. You'll see here too, if I set this back towards 22, let's say, and we have this enabled, we're at 92,000 for P&L. If I uncheck this, we're at 51. It essentially juices every scenario because you're never going to be selling below your cost basis. It sounds very simple, but sometimes the most simple solutions are truly the best solutions here, and really just accelerates the power of these algorithms. A third feature is the ability to now change what your cost basis is. So by default, for all of our recipes, it's going to be set to auto. It's going to calculate the cost basis based on whatever the buys and sells are. But we have a lot of clients who have a pre-existing position. And if you change this to manual, and let's say my cost basis was the last high, let's just call it 65,000, and I have one Bitcoin at 65,000, we've now integrated the cost basis in here. So if I zoom out a bit, I can see that, let's say we bought at 65,000, which is this buy order right here. I can see that our cost basis declines as we continue to buy these lows, and then we sell off and continue the strategy here. Those are the new settings for the arbitrage algorithm. A small one down here, I can uncheck this inputs and status line. You'll see right here, I have all my inputs. I can actually uncheck this to keep it cleaner. So small visual change, but nonetheless, we continue to make upgrades and improvements wherever we can. Before we jump into our 3 scenarios of accumulation, scaling out, and cash yield, let's set up our arbitrage algorithm, and I'm going to show you how to use the data window. These 3 examples will really highlight the effectiveness and power behind it. So first off, let's go into our settings again. Let's stick with this scenario where we're at -2.5 for the long threshold, 2.1 for the exit. Price mode's on auto. These can be anything at this point. Our entry size is 580, exit's 260. Let's start at 2022, 1/1, end date sometime in the future. We're going to limit this to available capital as well, and $100,000 for our initial capital. Press OK here, and we're going to expand the strategy tester just so we can see the top line. I don't need to see the graph for this example. To access the data window, we're going to go to the right-hand side of the screen once again. You're going to find these 2 stacked boxes. It's object tree and data window. Go ahead and click that. At first, you might just see object tree. Click the pill at the top, and you're going to switch to data windows. You should see all these inputs here. What this allows you to do, essentially, is when I hover over the price chart, I can start to see how all these values change. You see your initial capital up there. I can see my strategy equity ebb and flow as we make these buy and sell orders. I can see at the bottom of the window my average entry price, my cost basis, my quantity as well, my realized profit, and current values for cash and crypto. As we dive into the 3 scenarios, you're going to see how this becomes a really effective tool in order to dial in to our exact specifications. The first scenario is an accumulation scenario. So what is accumulation? Basically, when we say accumulation, we mean we want to acquire Bitcoin or the underlying asset over the long term. And that is really our priority. Our priority isn't generating realized cash returns. It's not selling off a position. It's I want to get into Bitcoin. I believe Bitcoin is going up over the long term. With our base settings here, our 580 and 260 trade size, we want to have a limit to available capital checked. And remember, in our scenario, that's $100,000. And you'll see why this is pretty helpful in a minute. Just to get our bearings straight on where we are with these settings, once again, we're starting at the beginning of 2022, which is actually a great time because we're in the middle of this downtrend. For those that were in the crypto markets during this time, this was not really a fun time to be in from an emotional perspective. The stories were all, hey, Bitcoin's going to zero, Bitcoin's useless. And this is after coming off of 68,000 and we bottom out, what is this, around $15,000, $16,000. This is a hard scenario to be in. And actually, this could mirror what we're seeing here today, where we come off this high and we're in this downtrend. And this could be somewhere along this path, which in hindsight, this was actually a great place to buy. I think everyone would have been happy with roughly $30,000 price point. Over our time period, we have made 81% off of our initial capital, $91,000. You can see within the data window, I see our realized profit is $15,000, meaning we've actually made $15,000 in cash in our account. We are currently holding 1.6 Bitcoin, which is worth $138,000 roughly. Our cost basis is $62,000. And our average entry price is $37. So this is what we are looking at base, right? Let's say we want to tilt this even more. And at the same time, we want to right size this for our $100,000 account. So this is really just an example. So what I'm going to do is I'm going to click entry trade size. I'm going to click this box. I'm just going to use my scroll wheel to increase this trade size. And what you're going to see is, since I have the cost basis line on, I want you to pay attention to the buy and sell orders around this area. You're going to see them change. And this is because the algorithm knows we only have $100,000 in capital. So when we come down here and we start buying a lot, if you look on the data window over to the right-hand side, you're going to notice as I come down here, my current cash will start to dip down. I'm at 79,000, 77,000, 75,000, right? So we still have plenty of money down at this bottom. So I know we can actually afford to buy a lot more. So I'm going to use my scroll wheel and I'm just going to increase this. And you're going to see my strategy will change once I land on a number. I'm going to go all the way up to, let's call it $15,000 or somewhere around that point. You're going to notice that you just saw a couple buy and sell orders disappear. That's because as our cost basis moves up, as we have the do not sell below cost basis button checked, we're not selling below this line as this rises, which once again turned out to be a really great decision in hindsight. And you're going to notice we're now up to $227,000 in profit versus at 91. So massive increase, of course, in gains. And it's a no-brainer. We increase the size of our buy orders. Of course, we're going to reap the benefits of it over the long term in this scenario that we have laid out. But what I want to show now is as we tick down here, I'm looking once again at my current cash. I'm now at 54,000, not 70,000 anymore. And as we get to the bottom here, I'm at $24,000, 15,000, 13,000, 7,000, 3,000, 1,000. So I know here, because we are down at $1,000, $2,000 in cash, my entry size is 1520. I can only take maybe one more buy order before I cannot take these buy orders. So we're actually going to go way past that point, and we're going to go to $5,000 as a buy size. And you're going to notice that cost basis line has changed significantly. So now what's happened here, as I move my cursor, I am at 70,000, 66,000 in cash, 30,000. And then over here, I'm at $4,900. I am below that entry size. So the algorithm will not buy because we don't have any more capital. You can see that's reflected in the P&L. We ran out of capital and now our P&L is reduced. We're at $100,000 versus that $200,000 mark. So we know that this is probably a little too big for our account size. So I'm going to click this box again and I'm going to find a nice middle ground. Let's just call it $3,000 here. And it looks like that's still a bit too much. So we actually were on a pretty good entry size for our $100,000 account. And keep in mind that $100,000 is maybe only partially realistic because that initial capital assumes that you aren't putting anything else into Bitcoin from 2022 till now. Now, most people, of course, have a salary or a business where they take regular distribution from, and therefore you're probably putting a lot more than $100,000 in over this time period. So this is really just a rule of thumb of, okay, if I have $100,000 over, let's just call it every year I can allocate $100,000, then maybe I need to increase my trade size to where I'm roughly distributing or purchasing Bitcoin at $100,000 a year annually. Keep that in mind when you are sizing these numbers. So I'm going to turn this down to 2,000. And this seems to be actually the sweet spot. I think we were at 1,500 before, roughly pulling $200,000 in here. So this is actually pretty optimal. You're going to notice now, once again, if we're talking about accumulating, that we are now at 3.8 Bitcoin worth $300,000 today, right? Notice how while we have vastly increased our amount of crypto we've held, our realized profit's actually gone down and we're at 8,400. Previously, we were around 15,000. So this is, as you can tell, optimized more for holding crypto long-term. It's pretty obvious when you look at the chart and you look at our entry and exit sizes. We're buying way more than we're selling. So in general, we're going to be holding crypto for the long term. Now, just for example's sake, let's increase this to $3,000 instead. And let's flip that script a little bit. Notice how the cost basis curve has changed drastically as we're actually selling off our Bitcoin that we're buying here. This is definitely not optimized for either accumulation or generating cash, but I want to show you real quick how changing the entry and exit sizes influences the end results and goals that you can achieve with the arbitrage algorithm. This next scenario is entirely new to the arbitrage algorithm. It's something our clients have requested often, and that is the ability to sell out of a position. We have a lot of clients who have held Bitcoin for many years and even longer, and they don't want to get caught at the top of a cycle again up here, let's just say. And it would be nice if we could always pick tops. Now, instead of having to endure another cycle like this, let's say if we get here again, we can set up the arbitrage algorithm to sell off our position. To demonstrate this feature, let's start with the scenario where it's the cycle top here, approximately November 2021, and we buy the top, right? We just buy blindly. And so come down here to the average price mode and change that to manual. Set the cost basis, the base cost here, to 65,000. And let's just say we bought 1 Bitcoin at the top. And go ahead and disable long threshold. So just uncheck this box here. And we can keep the trade size, entry and exit the same. Keep in mind, because we just disabled long threshold, that the entry trade size does not matter in this scenario. So you'll now notice that the chart looks quite different. You can see this is where we bought, cost basis +1. And you can see the straight line as we kind of go through time here. As we come up above 65 again, and this is about 2 years later, we start to sell off. We start to implement those sells, and it's at a 2.1% spike. So you're going to notice that we're selling above the cost basis again when we get here. This is a pretty great feature. Once again, this shows how we can sell out of Bitcoin or crypto in general. You'll see your P&L. We made $3,486 off of these trades, these sells up here, 23 trades total. You're going to see in your data window over here as I scroll through, notice that the bottom of the window, you'll see base quantity goes down as we sell, of course, and we're selling $3,000 each time. You'll notice your realized profit is increasing as we hit those sells. Once again, a great feature to sell out of a position, big or small. Keep in mind that the settings here are not tuned to do this. We can try to tune these things to sell at more optimal times, of course. For example, let's say we're selling at $1,000 each time. Let's bump this up to something like 4.3%, and I reduce the trade size to 1,000. So now you can see P&L is now $26,000. Even though we bought all the way here and sustained this drawdown, with the algorithm, you are now only going to sell above your cost basis. And this turns out to be a pretty good strategy. We're still up 25% on that entry over here. So this is a fantastic feature for those that have large Bitcoin or crypto holdings already and would like to just sell out at the right times. The final scenario I want to go over is probably our most popular use case for the arbitrage algorithm, which is generating cash. A cash yield is very hard to come by. Traditionally in crypto, you've had the ability on some exchanges to stake cryptocurrency, and that has gone good and bad. Sometimes that money just disappears for a variety of reasons. In this use case, the great thing is this is happening in your exchange account. There's no lockup, nothing like that. So it's a fantastic use case. You don't have to love or believe in the underlying asset. For example, for this demonstration purposes, I'm on XRP, and it doesn't really matter what you think about XRP. What matters is that with the volatility that XRP demonstrates, you can make a lot of money using XRP. What I've loaded in here is the 1 hour cash yield strategy for XRP you can find on our support site. So I won't necessarily go through just plugging in those numbers. It's the exact same setup you're going to find on the support site. So long threshold is -2.5. We're going to 2.1 exit, and I have the entry and exit sizes here in that ratio. I have the exact same start date as well that we use for the recipe. But I just want to go through and show you how effective this can be. You can see that the cost basis line is pretty jagged here. There's a lot of times where it drops to 0, and that's because we are selling out of our position completely before getting back in for another trade. And in general, what you're going to notice is any cash yield recipe or setting, you're going to notice that the exit trade size is probably going to be a lot bigger than your entry, and that is how we get totally out of positions, of course. As we hover over the chart and go through some of these periods where we're totally selling out of the position, for example, what I'm looking at right now as I go over is I'm looking at my realized profit, and my current crypto that I hold. Right now I'm at 12,346. And as I go over into these big volatility spikes that we do sell, you'll notice my numbers drop drastically. My current crypto goes from 12,000 to 1,000 very quickly, and my realized profit jumps to $4,000 in this case. So you can see as we go through the time series that it's just a great way to generate cash. Once again, the underlying asset really doesn't matter. We just find that certain ones like XRP, for example, generate a certain volatility characteristic, let's call it, that is really great for this kind of strategy. Once again, this happened fairly recently, the 7th of April. So we're going through, and there are times where we are totally out of the market. Once again, I'm hovering over the 6th, and we just sold off our entire position. We're at a realized profit of $30,000. And that's what this kind of strategy produces. So the arbitrage algorithm, in summary, can be used for a variety of use cases, whether that is accumulating an asset, a blend of accumulating an asset and generating a cash yield, generating a pure cash yield, and then also selling off a position if that's what you needed to do. So it's extremely flexible, versatile, and I guarantee you it'll fit your need and do a much better job of it than if you had to sit in front of the chart all day and try to do this yourself.